Hi, I'm Elliot Mcilrath, Product Strategist for Alternative Credit and PIMCO's UK team. You may have heard about asset-based finance and wondered what it's all about. Let me help demystify the exciting evolution in private credit. Asset-based finance, or ABF for short, refers to any kind of private lending that occurs outside of traditional corporate lending or commercial real estate markets. It's also referred to as asset-backed finance or specialty finance. ABF provides critical funding across the global real economy in categories you interact with daily. In fact, it's what enables us to finance a car purchase or obtain a home mortgage, take a flight on holiday, attend university, or purchase goods on a credit card. From an investing perspective, ABF loans are often secured by hard assets as collateral, which typically support the cash flows of the investment itself. This could be a house, a car, a plane, or financial guarantees like business receivables and intellectual property rights such as royalties, just to name a few. At PIMCO, we estimate the ABF market to be over $20 trillion. Much of this fixed income-like universe is held by banks or pooled into securitizations. But a major shift towards private markets is underway, which we believe is creating a multi-trillion opportunity set for alternative lenders in the coming years. PIMCO has been actively investing in various forms of ABF for decades, with our fixed income DNA crucial in making us one of the largest and most experienced investors in this space. Diverse and growing, we consider asset-based finance to be the next frontier of private credit. We've mentioned some examples already, but at a high level, the ABF universe can be broken down into three main categories: consumer, non-consumer, and mortgages. The consumer category includes consumer-orientated credit such as auto loans, credit card receivables, student loans, or other types of personal loans. Non-consumer areas are more business-related, including aircraft leasing, royalty streams such as music, or heavy equipment finance such as manufacturing equipment. Finally, the mortgage category includes residential mortgages in the UK, Europe, and the US, as well as home improvement loans. As you can see, ABF is a highly diverse credit market. However, most investors remain underexposed to this asset class, particularly in private markets. We think ABF is attractive for investors today for three key reasons. First and foremost, ABF has a target-rich, rapidly expanding opportunity set that we believe offers a compelling risk-return profile. Relatively high barriers to entry mean valuations today are attractive relative to historical levels. At the same time, ABF's defensive qualities offer potential downside mitigation, as ABF loans are usually secured by physical assets, providing an often senior secured investment profile. The second key advantage is a portfolio diversification. Private credit has matured in recent years, and in particular corporate direct lending has seen elevated competition, with most private credit investors heavily allocated in this area. Adding private ABF to a portfolio could potentially be highly complementary to investors' credit allocation, given the idiosyncratic, low correlated nature to other parts of private credit. ABF loans also tend to be paid back more quickly due to amortizing payment schedules, meaning there is less guesswork on whether you will be repaid. This adds yet another dimension of diversification relative to corporate direct lending, where coupon payments are interest only and a loan is only repaid at the end of term, meaning investors often have to guess how well a company will be doing several years in the future. Lastly, ABF has a very compelling entry point today. Stress in the US banking sector and tighter regulations have created large liquidity gaps left by banks pulling back. Private lenders like PIMCO are stepping in to fill that gap, partnering with banks looking to optimize their balance sheets by selling assets or seeking other partnerships. Scale, close relationships, and a deep understanding of these markets will offer strategic opportunities for investors with flexible capital. So the next time you take a flight or buy something with your credit card, remember the critical role asset-based finance plays in the global economy and the potential benefits it offers to investors.